Recapitalization? The perfect solution? Maybe. Many entrepreneurs are trying to do the next round to get them to the point where they are attractive enough to sell, sometimes creating the problem we just identified in suicide valuations. They become overpriced and can never sell. Don't let that happen to you. Then there's the firm that's on the fence, raise or merge. A video we showed you this summer talked about the pros and cons of both. What if you could do both? Look at both options simultaneously, raise or merge. You can easily. First off, understand that even the smallest firms can sell today because of bolt-ons. They account for 80% of all deals now. This is due to trillions, not billions or millions, trillions from private equity funding platform companies that make these bolt-ons, and mostly for cash, at even the smallest size anywhere in the world. And the same buyers will also look at recapitalization. Let me explain. Recapitalization is restructuring the company's ownership, debt or equity mixture to buy out some investors, potentially change preferred common stock mix, infuse new capital for growth. In an age where traditional debt, and venture sources have dried up, and the IPO market is down, this option from private equity may be ideal. It allows you to calibrate your worth in the M&A market against the recapitalization option. The trick is to be sure that you go to the market contacting both groups simultaneously, financial sources and strategic buyers. That requires a vast global database and a process that only Corum has. A couple of months ago, we showed you from our archives a company had been approached by a bottom feeder to sell for $25 million. We took them to market in a true global search, including both strategic and financial buyers, and got 4 offers. The first 2 were recapitalization, one for minority control at $40 million, another one for majority control at $60 million valuation. They also got an $80 million buyout offer in stock, but they decided to take a $72 million all-cash offer. Some of you have asked about more recent examples. Well, just last week, a client with over a dozen offers, both full buyout and recapitalization, decided on a 60% majority control recapitalization at a good value that is still confidential. The beauty of a recapitalization is that not only does it give you immediate liquidity, taking money off the table, but the right partner will work with you to grow your company even faster than you could on your own. When the company is sold again, that second bite of the apple can be substantial. If you've attended our boot camp, Selling Up, Selling Out, you've seen the case study of the Corum client recapitalized by Vista Equity at a $40 million valuation. The founders sold 90%, giving them $36 million in the first bite. Then when the company was sold for $100 million a couple years later, they took out another $10 million for a total of $46 million. Lower percentages can give even greater upside for founders with a strong belief in their products and lofty aspirations. For them, this 2-stage recapitalization approach can be the best way to realize the full value of what you have built. Is there a recapitalization in your future?